So I'm interested in what are you, because you have a little higher view here, so what are you seeing in your company's clients? Do you see an appreciable move underway and an appetite for these kinds of investments?
Yeah, I mean, absolutely. We've noticed a significant shift in this direction, particularly in the past 2 years or so. I mean, when I think back to where we were when we started this practice, and in particular, our work with faith-based institutions, and this is generalizing a bit, but, a lot of it starts with a discussion of screening certain assets, as, both of my other colleagues up here have alluded to. And then, in addition, often clients have been looking to more proactively invest in certain parts of their portfolio, whether that's, carved out as a specific allocation or, integrated throughout their existing asset base. And so, I think in particular, a lot of the areas that we looked at initially or where there was a lot of interest was in community investing. I know a lot of you are involved in that space, microfinance lending, et cetera. And there's always been certain institutions, particularly if that was their mission, that were interested in the environment. Since I've been doing this, we've always been following those kinds of strategies. But you use the word appreciable, an appreciable, noticeable difference in the past couple of years towards talking more about these environmental solutions types investments. I have to say, when we look across our client base, this divestment debate is still very much relevant to a lot of clients. We work with a lot of education institutions, so of course you can imagine that a lot of them are engaging with us on that issue. And so I obviously know this isn't a divestment discussion, but I only just mention it as very relevant because I think that even though a lot of our clients on balance are choosing not to pursue divestment, and the jury's still out with a lot of them, but I think fewer are going to really go that direction. But it's what has made these conversations, I think, very relevant for a lot of our clients. So when we talk to them about divestment, and we remain fairly neutral on this issue. I mean, we just have clients on both sides of that debate, and it's not necessarily our position to tell clients that they should or should not divest, but we help them think about what it would mean, how they're exposed in their portfolios, how they might move that direction. And to me, and especially if I'm helping my colleagues with some of these conversations they're having with their clients, I say, be sure to include, and we wrote a paper on this that also alludes to, all of the alternative solutions here. So don't just let it be a divest or divest and then say no and then stop. There are really other ways that that you can make these investments that we've been discussing today. So we've had a lot of those conversations, and just to put some scale around it, we have throughout the firm about 130 or 140 clients that over the past couple of years have inquired about MRI or social investing in some form or another. And about half of those are actually making investments or doing something. It could be small, it could be almost all of the portfolio, but something, and we're trying to keep track of that activity. And a lot of it now is moving towards some more of this environmental investing. And so if I have to think about thematically or where that focus really is, I would say it's cutting across two areas. The first of which, and there's so much more dialogue now just across investors and globally about the integration of ESG. And I think in particular, as people are thinking about carbon asset in terms of risk, it really is driving that conversation more, because this notion of incorporating ESG factors is really viewed as far more material to investment management than just a social strategy. And so on our part, in response to that and recognizing that, the MRI practice and some of my colleagues focus on manager research have historically looked mostly at doing diligence and recommending to clients ESG-focused strategies where the firm is identified as ESG. Those are very relevant to a lot of our clients and will continue to be. But we've pushed it a step further, which is to say, we would like all of our managers that we do diligence off across the firm, and all of my colleagues across the firm involved in manager research, to ask ESG questions of their managers. And so we're making a much broader push now to have that integrated into our systems, so we capture ESG responses from managers, and we're really making sure that all of our colleagues are asking those questions. And I think that we're going to uncover that managers are really thinking about this more than just as a social strategy, is really far more relevant, especially on the E side. And then, we'll get more into the details around this as the panel goes on, but certainly then also the push towards doing more proactively across asset classes. So finding thematic investments that are available really across, equities, private equity, infrastructure plays. Private natural resources is a great place that some of our clients are looking to some of these more proactive solutions. And so, that those two areas are really where this has been a focus for some of our clients.